Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have yet another Bitcoin / cryptocurrency market update for you. Except in this video, I'm going to go way deeper into some macro stuff. I think it will open your eyes to some really cool possibilities and hopefully help you make better decisions in the future. So before I jump into the content, please do me a huge favor, hit that thumbs up button, make sure you subscribe to the channel, and if you have not already, check the description. There's links down there where you can join ByBit. You can use my link to get a deposit bonus of up to $120 US, and you can also use the link down there to join the Patreon. It's just $7 a month, supports the channel, and gives you access to more frequent updates. All right, you ready? So last night, before I went to bed, I saw this really awesome idea. Will not take credit for the idea. I'll take credit for the TA because this person didn't TA it. But essentially what they were saying was they were saying on Twitter that they felt like we should be measuring the stock market and markets versus gold instead of the US dollar, because the reality is the Dow, I don't remember exactly how they put it. Let me look on Twitter so I can be accurate and I don't want to misquote somebody. Essentially, an ounce of gold bought the same amount of the Dow in 1980 as it did in 1880. Okay, well, if you don't know, 1980 was the top of the gold bubble. So that got me curious and it sent me down this rabbit hole. And when I went down this rabbit hole, it was enlightening, so enlightening. So let me talk about this rabbit hole first and share my excitement with you. Okay, I actually had to wait to do this video. I wanted to do it last night, but I had just shot a different video and I was like, I can't overload people. All right, so this is a gold / DJI chart. What this does is this measures how much 1 ounce of gold could buy of the Dow. It goes back to 1980 here. You can see it obviously had this horrific crash, right, where it lost over 70% of its value, and then it had this bounce. What's interesting about this chart is if we take some Fibonacci levels and we draw it from the bottom in 1999, and these are yearly candles, by the way, and we draw it to the top in 2011, everyone has heard me harp about the golden pocket and how that's the retracement you want. That's where you want to load up on an asset, blah, 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 right? And not blindly load up, of course, but that's a really good place to look for long setups and long positions. Well, gold came down, and in January, or excuse me, in 2018, because again, this is a yearly candle, it pinged that golden pocket and it has started moving up off of it. Meaning it's entirely possible that what this is the new uptrend, in which case it would look like this. You see it? That would put gold way up here at 0.349. Now again, this is how much of the Dow an ounce of gold could buy, right? If the Dow is around 30,000 points or whatever the Dow is at right now. Where is the Dow? It's up around 27,000 or so, okay? That's what this is measuring. So it's not a literal trade. It's not like you actually, buy the Dow with gold. It's just a comparison of the two. So what this implies is that the gold is getting ready to gain value on the stock market. Now that can happen a number of ways. They could both go up and go up more than the stock market. They could both go down and go down less than the stock market. Hey, wait a minute. When would something like that happen? Oh, yeah. What if the stock market crashes? Then gold as a store of value would gain versus the stock market. Are you seeing what I'm getting at? This is actually a bearish signal for the stock market. Okay. So keep this chart in mind. I'm not going to harp on it, but there it is. It's very simple. It's a yearly chart. There's Fibonacci levels. There's the golden pocket. This points to the idea that this is going to gain versus the stock market. And then if you put RSI on there, wow. RSI on a yearly chart has been sitting down in the single digits up until 2002, and it's slowly been gaining ever since, and it's finally peaking back out of the oversold territory. We haven't seen this in the last 40 years climb toward the top of this. I wish this chart went back farther so you could see what gold looked like back here, right? Because gold was way up in the oversold or overbought territory back here. Now it's way oversold and coming up out of it. Okay, So next, let's look at the reverse. Let's take this chart. So looking at gold slash DJI, let's look at the Dow versus gold. So we can do that by simply typing in DJI slash gold. All right, just like that, press enter. Whoops, not plus, gotta press the enter button. Now here's our chart for that. And what this says is how many ounces of gold is one share of the Dow Jones worth, right? Anybody recognize this chart? We've all seen charts that look like this in cryptocurrency, haven't we? Yeah, we definitely have. All right, you're watching? There it is, folks. There's your bubble. There's your pop, the .com. Boom, come crashing down versus gold. Here's your dead cat bounce, if it is a dead cat bounce. Where did that go? You ready? What is the golden pocket if you want to short an asset? It's the 61.8 on the bounce. And of course you should have known this was going to look like this because it's just the inverted chart, right? So there you go. There's your bounce to 61.8 and now we're moving down. Want to see something cool? You might remember Bitcoin's chart last year, the chart that I used to call the top in the summer of 2019. And by the way, when I say call the top, I'm not saying, oh, I said that $13,521.17 was the top. What I'm saying is when I said, look, that was a dead cat bounce, we're going back to 4K. That's why. Look, this is why I was so confident about this. You had to move up to the golden pocket, and then I was waiting for this support level to get retested and for this big gap to get filled in, right? And what happened, it came down and filled it in. Now look at your Dow Jones chart. Where's your gap on that one? If you're going by yearly candle, I wouldn't necessarily call this a gap, but if you're going by, you know, a similar chart and you're trying to do a fractal, there's your gap, right? Way down here at 8.26. Now again, that's how many ounces of gold you could buy with the Dow Jones, right? With one single share or one single piece of it. So if you look at that, where's the stock market right now? It's up here around 14.5. If it dropped all the way down there, that would be a drop of roughly 43% versus gold. And then if you go over to a Dow chart versus the US dollar, and if we put this on a yearly chart, so this is a yearly chart where every single candle is 1 year, and we know that our last bust was back in 1932 was the bottom. That's the last time this thing retraced to the 61.8, right? Or below it. So let's get that on the chart. Okay. I gotta move this over so I can get to the top. And if we draw this on there, where's our 61.8? That is a drop versus the US dollar of 61.8%, right? If this whole thing crashes back down to the golden pocket. And again, that's versus the US dollar, this is versus gold. So what that would be saying is gold would be gaining on the US dollar and gaining on the stock market, right? I know it's very, very macro picturish. You know, we're talking about yearly candlesticks, but I was fascinated by that. I was fascinated by this whole concept of using gold as your base currency versus using US dollar, which of course has to do with inflation and everything else. So how does this apply to crypto? Again, it just all goes back to the same thing. If the stock market crashes, does cryptocurrency become the new thing and survive and thrive? Or does cryptocurrency finally do that hardcore retracement that I've talked about time and time again, back down to those, you know, 1K, potentially even lower levels? We just don't know, right? But I think all this stuff should be very, shouldn't be scary because emotion doesn't belong in trading or in markets, but it should be a red flag. It should be a warning flag that, hey, I need to be careful. I need to do my due diligence. I need to be, you know, very logical about the decisions I make and not fall victim to emotions, because these cycles, these are all lining up, right? The 100-year super cycle idea or the 90-year super cycle idea is lining up with this gold versus the Dow chart. And it's also lining up with our dollar index. Remember, I did the video a few days ago saying that this looked like it was trying to put in a W. Still looks like it's trying to put in a W, right? This one on momentum, it hasn't confirmed yet because it hasn't broke and closed above the neckline. It got rejected right there or stopped right there yesterday. But if you look, the W on RSI, it confirmed. That is a confirmed double bottom, right? I wouldn't call it a double bottom. I call it a W. Let me back up a little bit. It's not a double bottom because double bottoms need to be a little bit closer, right? But it is a W. It's a wonky W. You've got your, down, up, down, and it closed above the neckline there. So you have a close, and if you drew a, if your W looks something like this, might be your neckline is like a, sloping neckline type of deal. In fact, look, right? Something like that potentially. Maybe this is a channel that is going to be playing within. We don't really know, but we do know that's a W, right? So the dollar looks like it's going through this period of accumulation, which is obviously, if it is accumulation, could also be redistribution. But if it is accumulation, that would be bearish, typically speaking, for the stock market. Gold looks bullish versus the stock market, right? All these things are coming together in this perfect storm. And we could end up seeing the type of crash that nobody wants to see, not even bears, okay? So I found all that super interesting. I wanted to share it with you, and maybe I'm just a geek, because to me stuff like that is like just fascinating. I can sit and I can geek out over that stuff for hours, just digging into it and digging into it. And I did a lot more in-depth analysis. I'm not going to share everything I did. I looked over this thing for over an hour, just digging through different time frames, digging through different setups. For example, the three little pig setup. I found it in plenty of places. Found it on the monthly chart, even on gold. So just really fascinating stuff. Okay. As far as crypto goes, let's take a quick look at Bitcoin. I'm going to keep this video fairly short. Okay. Weekly chart, we don't care about it. Week isn't closed. All right, so this is actually an hourly chart. I know I don't normally talk about the smaller time frames, but I'll show you guys how cliche this really is. So I took a long position this morning right before I went to bed. My Discord members got to watch me get stopped out on that. That sucked pretty bad. I was pretty irritated. But essentially, there was a nice long setup that came in. And if I can get it on here. Look like that, right? And I entered over here around 13. I think I entered at 1360 or something like that. Just over 13 grand, right? Got stopped out on this top hunt and then called it. And ended up going to bed right on this next candle. But right before I went to bed, I showed them a setup on Discord that looked like this. And I said the whole reason I went long was I wanted to go long and try to fill in this gap, right? So, and I know if you're looking at this going up, wait, 1.29, that's not 2 to 1. Yeah, 2 to 1 is what you really should do, especially if you're a newer trader. But I know my win rate. My win rate's about 80%. So I can actually get by with less than 2 to 1. But I didn't take the trade. I went to bed. After I got stopped out, I was like, okay, whatever, you win. So this thing did pump up. It filled in this gap. And then while I was sleeping, did all this mess. And man, Bitcoin loves to do this. And up it went, right? It had this big red candle pinged right off of it. So where it's going now, hell if I know, right? I haven't looked at it enough to really know. I literally just said that a little bit ago. But I just noticed that right away. I thought, man, you gotta be kidding me. So cliche, right? So I wanted to show you that. The other thing that I wanted to talk about was this daily chart real quickly, right? I have seen some people saying that this looks like reaccumulation. I think it's really early to say that. I can't even begin to agree with that. When I look at this, what I see is a long-running divergence, right? And I see a double top that I believe I talked about in yesterday's video. I can't remember for sure. I see a double top sitting right here, right? Trying to get this lined up perfect. So it's, there you go, right? So I see a double top. I see a close that closed way down below it yesterday. And most often these things will come up, and we know test, wrong line, sorry. They will come up to retest their neckline, and then you will get more downside, okay? So obviously we're at resistance. We've got this double top. Not feeling real bullish about that, right? Not feeling real bullish about that at all. We're not going to talk about crashes. We're going to stay away from crash talk when we're talking about Bitcoin right now. We'll wait and play it level by level. But the first level that I'd be watching with a lot of interest is this support here around 12.3, right? And the gap, this huge gap, which is sitting down around 12K, right? So I suspect that if Bitcoin is going to go higher, at the very least, it will first come down and test these levels, okay? So yeah, we're going to keep the analysis super short because there's really not much to say, right? That's what I think is happening. I think it wants to come down and test those levels. And draw some lines, try to get a nice upward sloping trend line, right? If this is an uptrend and this is the uptrend through here, right, could come all the way back down here to around 10.8, right? Still be in really good shape, still be very, very bullish, still be above the 200 moving average. The 50 moving average is around 11.1 right now, but it wouldn't be the end of the world to break through it on a tail and then come back up, right? So still a lot of downside. Even if you're bullish, there's just a lot of potential downside, right? We haven't retested this level here yet. So, you know, down around 11K is a potential, you know, pullback. And if you're drawing Fibonacci levels from the whole move, we know the move's down around 6K, the golden pocket. But if you're just drawing them from, say, this move back here, because watch this. That move got down to the golden pocket on the smaller time frame. This move hit the golden pocket on the smaller time frame. But this one hasn't done that yet. So if we're talking strictly smaller time frame, this retraced to the 38.2, which is often a bouncing point and a strong trend, right? And then it went all the way up. Whereas at 61.8, down around 11.5. Okay, so I suspect that we're going to head back down at least, you know, $1,000 to $2,000, and at that point, that's when we'll be able to look at the chart and try to predict whether it's going to go lower or whether that's going to be a foundation for that, you know, quote unquote new bull market. I hate using that term, but a new uptrend or a continuation of the existing uptrend. All right, so let's keep the video short. Let's wrap up there. Hope you guys enjoyed that different take. Hope you enjoyed the gold talk, the Dow Jones talk, and of course, kind of putting that whole picture together with the dollar index. As always, please remember that I am just some guy sitting in a spare bedroom, so it's absolutely possible I'm dead wrong, and you should always do your own due diligence and seek out professional investment advice from a licensed financial advisor before making any type of investment in cryptocurrency. So again, this is James with Crypto Common Sense, reminding you to please trade safe.